Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the Americans seem to have a deal on their debt limit, at least until the extreme party members are overcome in a vote. They have enough funding authorised to last until June the 5th. But first, over this past weekend, China's industrial profits data was released for April and it was weak. It fell almost 21% in the January to April period from the same period in 2022, although the drop was slightly more than the 21% for the first quarter. The marginal improvement in April alone will be of little comfort because this is when a recovery surge was hoped for on their opening up, but it isn't happening. Private firms are doing much worse than state-owned enterprises there. And Taiwan lowered its economic growth forecast for the year to 2%, the slowest pace in nearly 8 years after the island slipped into recession in the first quarter of 2023, reporting a 2.9% annualised drop from the first quarter of 2022. And Singapore's industrial production dropped more than forecast in April, down 6.9% year on year and 1.9% from March. This was their 7th consecutive month of year-on-year declines and the worst streak since 2015. Japan's economy is standing out with its impressive resurgence though. Across the Pacific, as we've noted, there was a US debt deal, and even though it has yet to pass Congress, we're assuming it will, and they will be in catch-up mode. The US Treasury now has very low cash reserves due to the consequences of the impasse, and this will need to be made up. They will do that by rushing to raise funds in the Treasury bill market, maybe as much as $1 trillion. And that will suck up liquidity temporarily until it is spent, all at the same time that the US Fed has been selling down its own bond holdings. In the real world, American personal spending jumped 0.8% in April from March, the most in 3 months, and double the market forecast of a 0.4% gain. It is a clear sign consumer spending there remains solid. If there is a downside, PCE inflation is hovering at around 5% and not retreating much yet. And Australian retail sales didn't change in April from March and were 4.2% higher than a year ago levels. That means in volume terms they'll be lower because Australian inflation is running at 6.3%. US Treasury 10-year yield starts today at 3.80% and will probably be on hold while the US is on holiday mode this weekend. And a week ago, this benchmark was at 3.69%. And the price of gold will start today at $1,946 an ounce. That's up $3 from Friday. And oil prices are up 50 cents at $73 in the US, and the international Brent price is just under $77 a barrel. And the Kiwi dollar starts the week at 60.5 US cents. That devalue up by 3.8% in a week and 4.8% since the beginning of the year. Against the Aussie, we're still at 92.8 Australian cents, against the euro at 56.4 euro cents. That means our trade-weighted index fell 20 basis points to 69.4. So overall, the New Zealand dollar has devalued 2.7% in TWI terms for the week, and the same since the start of the year. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.